Hello and welcome to another video here at Fiscal Voyage. I'm Felix, and today we're going to do a stock analysis on BP. BP was suggested by SSJJ005. Thank you, SS, for suggesting BP and for commenting on a previous video of mine. So let's start with a 5-minute stock analysis of the company BP to determine if it's a buy, hold, or sell at current prices. Okay, let's start the 5-minute stock analysis of BP. Could be found in the New York Stock Exchange as BP. Is also the company was also known as British Petroleum Company, which is a multinational oil and gas company headquartered in London, England. It is one of the world's 7 gas super majors, whose performance in 2012 made it the world's 6th largest oil gas company, the 6th largest energy company by market capitalization, and the company with the world's 12th largest revenue. It operates in the oil and gas industry, including exploration and production, refining, distribution and marketing, and petrochemicals, power generation, and trading. And it has interest in renewable energy with biofuels, wind power, and solar technology. As of December 31st, 2018, BP had operation in nearly 80 countries worldwide, produced around 3.7 million barrels per of oil equivalent, and had a total proven reserve of 19.9 billion barrels. The company also has over 18,700 service stations worldwide, and its largest division is BP America in the United States. All right, so let's look at the fundamentals. From 2009 to 2018, revenue grew at a compound rate of 2.28%, which is very low for such a large company. So revenue hasn't been growing tremendously, and actually the past 5-year average is negative 4.12%. So revenue has been decreasing recently. However, net income in this same time period was negative 6.13%, but in the last 5-year average is over 25%. So there've been huge improvement with the net income, which is great. S&P gives the company a credit rating of A minus. Operating income from 2009 to 2018 came in at negative 5.26%, and earnings came in this time period at negative 1.73. I don't like that at all. I like earnings to grow in a decade, but it looks like with BP was at a negative, and actually the 5-year average is also negative at 0.9%. If we continue with the fundamentals, for 2018, the company had adjusted earnings of 3.82 cents. Net margin came at 3.14, which is expanding versus 2017, which was 1.41. But even that margin is quite thin there. Debt to cap at 38%, return on equity at 9.43%, which is decent. Current dividend yield currently is a whopping 6.34%, which is great, much higher than the S&P market there. Dividend payout at 83, which is very high, so don't see too much dividend growth. As you can see here, the 5-year dividend growth rate came in at 1.02%. However, they did add a recent increase at 3.4%, so that was at least above inflation there, and they've been growing dividends for 7 consecutive years. They have a charter rule if you're adding the dividend yield plus the 5-year growth rate at 7.36, which is much lower than the 11, 12, 13 charter rule that I like to see, which it has to do with, of course, the dividend growth for the 5-year. The 5-year dividend yield average is 6.39, so the company yield is actually a little less than the 5-year average. That's because the price has been picking up recently. So if we look at the future outlook, analysts expect for 2019 for full year to come in at 294, which is lower than the $3.82 for 2018. However, they're expecting them to pick up at 2020. CFRA has a 3-year projected earning growth of 10%. And my dividend yield return model projected total return of 6.8%, which most of the return is going to be from dividends and maybe some from valuation. Forward PE has a 12.2, where currently is at 13.1. So this has to do with the expected earnings higher for 2020. And they have a 5-year PE average of 20.6, because if we look at the next slide, from 2016 2017, they had earnings of 0.83, 1.88 dollars a share. So the black line here represents the monthly closing price. The blue line is the normal PE, and the orange is the earnings with a 15 multiple. As you can see here, the black line is right on the normal PE of 12.84. So based on this, it looks like the company is fairly valued, or could be slightly undervalued if you look at the earnings. So let's look at the fair price valuation chart here. CFRA has a fair value of $42, Morningstar at 52, FastGraph at 40, Yahoo at 48, and my dividend discount model analysis at 37. If we averaging out to 5, we get a fair price of $44.15. Current price, the company is going for $38.83 a share. So that means the company is undervalued by 13.7%. This is actually where I like to see companies undervalued, at least undervalued of 10% or more, because it gives me some margin of safety. So with that, I recommend the company as a buy. I own shares of the company actually, and it has been lagging. I'm in a negative, I think 14% or so, but I'm collecting the dividends, and I'm continuing to hold the company because I love the very high dividends I receive, almost 6%. I will continue to hold position because it is in full position. So I'm personally not buying because the fact that it's in full position in my portfolio. So I am interested in investing in other companies. This company is it's not a growth stock. It's more for income seeking investors because of the high dividend yield. With that said, though, there is some upside current prices, as you saw that is undervaluated. So if you don't have a position already, and for example, if I didn't have one position already with BP, I personally would be buying at current prices. However, I don't like the low dividend growth rate and the low margin, but like I said, the high dividend yield and the undervalued it is, I think it's just a buy. So with that, if you have a company that you would like to see next, please leave a comment with the company name and ticker symbol. And thank you for watching. And if you find this video informative, please hit the like button and subscribe to my channel for more like this. You can also check my portfolio in the link in the description below. Thanks again. Have a great one.